Hi there, it's Bill with Smart Trades, and it's about 9 a.m. on Wednesday, July 21st, and I just wanted to do a review of the last couple of days' action and also the bigger pattern on the S&P and some of the other stock indices. To start off with, let's look at the S&P futures, and this is a daily chart, and just reviewing our double zigzag count, which is very much still intact up to this point. We've basically come up and touched the top of the trend channel. You could adjust the channel off of the highs if you wish, and in which case we've gone through it just a little bit. But the bottom line is the basic pattern is still intact up until this point. That's one of the keys. Let's look at this on the Russell futures as well, and you can see here same thing where we've got our first zigzag down, X back up, and we're working on a second ABC with B potentially complete, and a weaker rally so far in the Russell, indicating relatively thin participation in this rally, and that on the surface is somewhat bearish. However, and there's a big however here, here's the S&P cash, and this is looking at it on a 15-minute. And off of the lows yesterday, we actually have what can clearly be counted as an impulse wave up. In other words, 5 waves up. And off of that, so far, we have a corrective or ABC type of pattern. Now, these patterns can evolve into an impulse to the downside, but up to this point, it does look like a corrective decline. And here we are. This is that trend line off of the daily charts, and we're obviously running into it. We gapped over it. We've run through it, and a key area right now is the top of this little B wave just intraday. That comes in around 1085 basis the S&P cash. So let's watch that area. If we go through there, that confirms the probability that this indeed is a corrective decline off of the highs, and it means that we're going higher. On a longer term basis, we're looking at the old highs up around 1100. If we go through there, there's a fair chance that this is a different kind of pattern than the zigzag or double zigzag type pattern that we've been looking for. So just a cautionary note. First, let's watch 1085 on the S&P. That's only a couple of points above where we are now. If we go rocketing through there, the potential exists for a test of 1100, and if we get through 1100, that potentially breaks the down channel on the S&P. The other markets will have to be taken on a case-by-case basis. Let's take a quick look at the Russell here, and this is the Russell futures 24-hour, and that B wave position comes in just below 624. We've got a little bit more room to move there, but again, you can see that ABC type pattern off of the high. And then let's also take a look at the NASDAQ cash. Now the NASDAQ cash, let's pull back a little bit, has already gone up and almost tested the recent highs. So that, and you can also see here the 5-wave structure up, the potential ABC correction down. And the implication of this is that there could be at least one more run back to the upside. So I'd be a little cautious here. We need to just let this play out and see what's happening. And but for now, again, the longer term count is intact, the bearish count, but I would be cautious and a little defensive if you're short. And if you're flat, that's not the worst place to be here, because it's not clear what's going on the short-term basis. Again, here's our longer-term count. At any rate, have a good one. Thanks for watching. Bye-bye.